Hello everyone, today I'm going to talk about why 90% of traders lose money. Why are only 10% of traders making money in the markets? How can only 10% of traders take money from the 90% of traders that are not profitable? So let's get straight into it. The biggest reason why 90% of traders are not profitable is because they all follow the same patterns in the market. Everyone's doing the exact same thing and no one's making money, but they continue to do these things, such as the Fibonacci, smart money concepts, supply and demand. They're all getting into trades at the same exact positions. If they're all following the same patterns, don't you think it's logical that this will not be profitable long term? Because it's obvious where their entries are, it's obvious where they're getting into the markets. But what if you knew exactly when the majority of traders were jumping into a trade? What if you could pinpoint that exact moment? And what if you could take advantage of all of their stop losses and liquidity? That is evident on the charts. We can break this down and visually see where the stop losses are, where the liquidity lies, and that is our target for where we are taking trades. And that is exactly what we're going to get into in this video. So let's get to it. Before we start, I know you won't want to watch the end without knowing that I'm legit. So let me tell you exactly who I am and how I got here. My name is AJ Currency. I'm the founder of FundedX. FundedX is one of the biggest growing, fastest growing prop firms in the world right now. And we have a database of tens and tens of thousands, almost 100,000 people all around the world, 196 countries that trust us as one of the best prop firms to use with 24-hour payout guarantees. The best prop firm, FundedX. Number two, I've been trading for 8 years. I got into the markets in 2017, first started trading cryptocurrency, went through a period where I made a lot of money, then lost a lot more money. Then I started trading FX, lost a lot more money again, and then I started to finally become profitable 4 years into my trading journey, where everything started to go uphill for me and I started to make consistent income, and obviously now living the life of my dreams. Right now I'm in Turkey, I'm staying in a $3, $4, $5 million villa. I don't know how much this costs, living the lifestyle, been traveling around Europe for the last 3 months, living in massive villas. Go check out my Instagram, go check out my main YouTube channel, and you'll see how I've been living. But it's a trading channel, so I'm going to focus on trading here. But basically, after 8 years in the markets, I'm able to do whatever I want, whenever I want, thanks to Forex trading. And because of the 8 years, I studied all the concepts and I've compiled the most important in today's video for you. So without further ado, let's jump straight in. How candlesticks work. So again, bringing it all the way back to the basics. We have a bullish candle and a bearish candle. What that means in a bullish candle, price is going up. In a bearish candle, price is going down. What does that mean exactly? In a bullish candle, the open price will be lower than the closing price. Therefore, it's a bullish candle. In a bearish example, your open price, as we can see here, right there, is much higher than the closing price. So therefore, we have a bearish candle. That is the difference between bullish and bearish. Now, candles will have wicks. What do wicks mean? It means, if we focus on this bullish example here, we have a candle body, which is this here, which you can see we have labeled as body. We have a wick, which is an upper wick, and a wick down here, which is a lower wick. What a wick means is if we consider that this is the open price for a candle, and this is a close price. Within this candle, whether it's a 1 minute candle, 5 minute candle, 15-minute candle, 1 hour candle, we have price action. Now, what that means, if we have an open price here, it means that price went as low as this point here, the very low of the wick, before coming up. Then it had a high as this point here before coming down. This is where we close, this is where we open. So during this hour, or let's say it's an hourly candle right here, we don't know exactly how price moved. It could have moved down here, could have moved up here, all the way back down here to fill this wick, and then came back up and it closed all the way here. It can move a lot. But basically, the important things to understand is that we have an open price, a closing price, and obviously a wick to the upside or downside, which indicates where price moved in between that open and close. Again, the bearish candle will be the opposite to that. So we have our open price and our closing price, which is lower than the open, therefore a bearish candle. We have the upper wick and the lower wick where price moved within that candle. Now again, this doesn't matter if it's a 1 minute candle or a weekly candle. Every candle is the same. This is the foundations of trading and how understanding how candlesticks actually work. Now we should understand how markets work. So what do we have in a market? Well, we have market participants. We have traders, which are trading strategies, or maybe no strategies. They're completely gambling. But basically, we have traders in the markets. They could be trading any sort of strategy, such as market structure, such as supply and demand, Fibonacci, such as smart money concepts. There's a ton of different strategies. But then we have the big boys. We have the banks, we have the institutions, and what are they doing? They're finding where the liquidity lies in the chart, because liquidity equals money. Stop losses equals money sitting. If there's stop losses that are high, there is money sitting above that. The big players know for them to collect all that money and be profitable themselves, they want to take those stop losses out. So that is the objective of the bigger players versus the smaller players. We're not looking to take people's stop losses out because we don't have the capital to do so. We're just looking to trade a strategy which has an edge over the market and try and be profitable from that. So that's why we'll use their entries, meaning the banks and the institutions where they're looking to push price. That is where we want to go, which is generally in the opposite direction of the herd. Stay with me here. Let me just show you. So we have step one. Step one is a bullish trend, where the weekly, the daily, and the 4-hour is bullish. Now again, this is the 1-hour time frame chart. This is just indicative of a trend being bullish on the higher time frames as well. So we have a higher high, a higher low, and a higher high, where we know a lot of traders are now looking for buys. We have a resistance level above. So again, why do I think price will go here, or what I expect price to go for a resistance level? Because there's a lot of stop losses above. If there's a support level, which we can also see on the chart, where a demand zone sits, we know there's a lot of liquidity below that too. So again, it's knowing where to actually trade in an intraday scenario. We also have our Fibonacci retracement, where now a lot of traders are looking for buys. So you can see this demand zone, which I've just spoken about. The key information is that right now we have a bullish range. We have a 61.8 retracement. We have a demand zone. We have a support level. So we have a lot of people at this very moment looking for buys. This is when we enter short. This is when we see all the confirmations of people buying and we can form our short bias. If people are buying, and we can see 90% of people in the market are looking for buys, it's one of their signals to get into a buy when they see a bullish push, a 1-minute break of structure, a wick to the downside and price pulling back on the 15-minute. There's many opportunities they look for to get into their buys. We look to go the opposite direction. Again, there's many strategies such as Fibonacci, break of structure, smart money concepts that they're going to follow to get into their buys. But they're all getting into buys at the exact same time. That's what they don't realize, but we do. And so we can counter trade them, take their money, and go the opposite direction. That is how we're going to be profitable. Step two is now we can identify, great, we're looking at the charts, we're looking for reasons when they're going to go long, and we can do the opposite. So here, we now have a 15-minute time frame. We're identifying we have a support level at the low of price, meaning that we can see that there's, like I explained, a lot of liquidity below those lows. An amazing opportunity to sell into that. We also have a demand zone where price is now coming into. So it's an easy trade and a perfect opportunity to look for a sell. Now, why would we look for a buy if price came up here? Well, we had two bearish breaks of structures where I have those lines drawn. Bearish break, bearish break. That is an indication that if price comes back up into a supply zone, we have a resistance level above, we would then look to buy through that. It's very, very simple. So we're reacting to price and where the majority of traders are entering their trades. So the key information from this chart here on the 15-minute time frame is if it drops to the demand zone, we can look for a sell and short through that liquidity. Take all that liquidity out and make money. If it goes up into the supply, we can actually look to buy through that because now we know that everyone's looking for sells again. We have to kind of adjust and adapt to price to find the high probability entry. Otherwise, we analyze it more on the 1-minute time frame. And here's the 1 minute. So what do we have? We have price stepping its way down into the demand zone. So we're looking for a sell here. We just need to find the right opportunity to do so. We can see, we're looking at the charts zoomed in. How do I know that their confirmations have been met? How do I know if I have enough confirmation on my end to jump into a sell? That is my goal here, and that's what we're looking for in this example. So what we need to do is monitor price action carefully. I'm looking for false sense of a bullish break. Again, enticing all those people to just jump into the market, that last confirmation that gets them all into a buy and then convinces them that they're right on their move. That is when I jump in the opposite direction. So to make it easier for you, let me show you a real-time example of a trade which we're going against the herd and making money. Step 3, if my goal is to sell, I want to see bearish structure indicating that price is moving down lower. Then Smart money concepts traders particularly are waiting for a bullish break. This is what they want to see to jump into a buy. So a bullish candle would entice them all to jump into a buy. And if we see that, we want to get into a sell. So once this happens, they're all going to jump in. When they're all in a buy, we go against the market and we're going to make money. When the trap is confirmed, I enter. I enter my sell and I place my stop loss beyond the liquidity pool. Again, I trade gold primarily, so 20 to 40 pips stop loss on gold works super well. Cover any sort of recent high or support level, resistance level above or below price. Again, I'll explain this more in further videos, and which I do explain a lot more in my mentorship and much more depth. But once we get that confirmation, we are good to go. So I want to show you a live example of a trade that I took where I managed to profit $13,000. Now, let me jump onto the charts shortly, but if you want to learn and you want to stop second guessing every entry that you make, you want to finally hold trades with confidence, you want to know why you're in and where price is actually looking to go. If you want to trade with a repeatable plan, not emotions and not guesswork, then the Currency Squad is for you. You get one-to-one access to me. You get live trading sessions where we're breaking down the charts in front of you, trading live so you can see in real time how this strategy works. You get a complete strategy blueprint, which is 12 hours course in depth from A to Z, from beginner to advanced, where you learn to trade exactly like I do. You get real-time trade alerts, full analysis on those trades, group coaching calls, access to my private prop firm connections and exclusive discounts, as well as priority support. Find the link in the description below and let's get to it. All right, you may have some questions. If you have any questions, please reach out to me on Instagram at AJCurrency, aj.currency. I'm here to help. Anything you need, anything, anytime, reach out. I will chat with you. I'm not gonna leave you unread. I'm not gonna give you some stupid response. Chat with me, I'm here to help. Well, thank you so much for watching this video. I'll see you on the next one. Be sure to like, comment, and subscribe to this channel. I've got plenty more to come.